Let me come to you first, Garima. Tell me, what's your sense of India's trade deficit right now? Why do you think it is so high? Do you think India is walking this fine line between Atmanirbhar Bharat and what one may call perhaps an isolationist economic policy?
Hi, Vikram. I think two things to understand in the March deficit print. Number one, it is much lower than what you saw in December and January. So it is not an aberration. Number two is this reflects a lot of purchases that happened, particularly excess imports, in anticipation of implementation of tariff. If you look at China's number and China's exports to India, they grew by 13% in this month of March, highest since 2018 third quarter, if you exclude the COVID-related disruption. So what that tells you is that there has been a lot of advance purchases or advance importing before the tariff regime got implemented officially. So while these numbers look little discouraging at the headline front, especially the deficit as well as the import number, there is a reason behind this.
Yes.
I don't anticipate this to continue in the coming quarter.
But Garima, if I were to ask you of the overall picture, because ballooning trade deficit is something now that we are taking for granted. Why has it been ballooning? We're talking about a single month, but what about the larger picture when it comes to India's trade deficit?
See, a large answer in this lies in the growth differential of India versus the world, where India's growth has held up or has marginally improved ever since the third quarter print of FY25 came in. We are on the other side seeing a gradual slowdown in global demand. Plus, you are seeing disruptions which are probably your tariff led, which are kind of putting pressure on exports. So while exports have nearly not grown, they've grown at less than 0.5% on full year basis. Imports have grown at handsomely more than 6%. So this actually explains a divergence. Number one. Number two, gold imports in India have been consistently high, partly because of the soaring value of gold.
Yeah.
And as a safe haven or investment value, demand for gold has risen. So that also explains the aberration. But having said that, because the services exports have been holding up very well, growing about 13 to 15% on year for most part of current financial year, our current account deficit should not be more than 1% despite these high trade numbers.
Fair enough. Mr. Dasgupta, how do you see the overall picture? What's your sense? Are we still seen as open for business by the world? The Commerce Secretary says that India has done better than other countries. But more than speak about it in relative terms, what's your own assessment of India's export potential as it stood over the last decade or so? How much have we tapped into it? Why do we have this ballooning trade deficit, you think?
Well, I think if you combine goods and services, the exports have increased by about 6% to about $820 billion in the last fiscal. And imports have risen by about 6.85% to around $1,047 billion, $1.047 trillion. Now, as my co-panelist has mentioned, the industry was also importing things which it really did not require immediately in anticipation of the tariffs which were to come into effect from the 2nd of April, which got postponed. Now, if you look at the granular details of the kind of imports that have taken place in March especially, and in February to a certain extent, you'll find that electronics, we have imported much more than we usually do. Gold has shown an increase of about 27% during the year.
Yes.
And that also reflects the kind of unpredictability and volatility in the market about the rupee falling even further.
Yes.
Against the dollar, etc. So there are a variety of reasons. And if you would have noted, Apple is supposed to have sent 5 plane loads of mobile phones to beat the April 9 deadline. Now, it was much more than their usual dispatch of mobile phones to the US. And obviously, it would have called for some advanced planning and more import of components,
Yes.
electronic components, etc. So it can get explained in these terms. But having said that, if you are a growing economy, you have a shortage of raw materials and components. And if you want to have capital goods, then obviously you are going to import more. So your exports will grow, but your imports will possibly grow at about the same pace or
But
slightly
is that the
higher.
reason why
That
it's
has
happening,
been
Mr.
the
Dasgupta? Are we importing more to be able to produce more? And are we producing more to be able to export as well and tap that exact potential? Because it seems a lot of our raw materials have gone out to China over a long period of time, hasn't it, Mr. Dasgupta?
yes. If you look at our exports also, you will find that apart from finished products, we have also exported. Minerals, for instance, we have exported coal, and a few other things which are in the category of raw materials.
Yes.
So, having said that, we are also buying a lot of raw materials. For instance, crude oil we are buying, and we are re-exporting the petroleum products, which is one of our highest, export earners. So it acts both ways. You export more, but for that you need to import more.
So, fair
As
enough.
far
But
as
yes.
yes,
But
no,
Garima,
as
I
far
just
as
want
the
to take that
domestic
across.
consumption is concerned
Yes.
from imports,
Yes.
I don't think that is very high, because for one thing, if you look at the luxury goods, broad category, you will find that we are not really increasing our imports of luxury goods. So it is basically petroleum, other raw materials, components which are required for the industry, whether for domestic consumption or for exports.
That's the important
That
question.
is
Are
what
we
is
doing
missing.
more for domestic consumption? Or are we doing it enough to be able to propel our export potential? That's something I want to ask you, Garima, because you see merchandise trade, it's barely moving the needle. It begs the question why India's manufacturing base is still not ready to meet global demand at scale. What do you think is the reason? Have we been too inward looking, serving our own domestic needs and under delivering when it comes to global competitiveness?
I wouldn't really totally agree with that. Yes, to a large extent, until at least PLIs and Atmanirbhar Bharat as a program or Make in India started, we were kind of becoming more of a trading economy, importing from China and then exporting elsewhere, adding very little value. But ever since PLIs have been launched and Make in India and Atmanirbhar Bharat has been implemented, safe to assume that in sectors where we had relatively no presence for at least 5 years ago, we have created a reasonable presence. Today, 20% of exports of Apple's iPhones are taking place out of India. They are looking to buy new parcel of land in Uttar Pradesh. So they're looking to increase this number eventually to maybe 30% of their total exports. Whenever any economy that has had no value chain presence in a particular component or a product enters into manufacturing, the first leg is always going to be import heavy, because we have not created or we do not have a value chain for those imports. So you start off with an assembly and start off with adding value about 2% to 2.5%, which assembly brings you. And gradually, as the value chain develops, you see a lot of components getting indigenized. So what we are seeing
This
right now is
process.
although
Garima, why
although
is this process so gradual? Because we're still building value and manufacturing seems to be stuck at 14%. Isn't that a very small number?
see, all said and done, it's difficult to imagine India's manufacturing sector skyrocketing to a share of 20% that the government had anticipated, because outside electronics, outside few other sectors, we really have not been able to scale up. One, call it cost of manufacturing in India, relative labor cost, or cost in terms of bureaucratic procedure. All of these basically are still keeping us less competitive vis-a-vis peers such as Vietnam or even smaller countries in terms of textiles like Bangladesh.
Yes.
Now, the scaling up will take time. It takes time in every country. The I should say the direction is right.
Okay. But now
As
is the
long as direction
opportunity.
is right, we should be okay.
Yes, but even as we say that, the opportunity is rising right now with tariff wars unleashed. And Mr. Dasgupta, do give us a sense, because PLI schemes is something that we want to leverage even when it comes to the bilateral trade agreement talks that are going on with the US. And of course, several schemes have been announced over the years when it comes to PLI. Are they delivering the scale and the quality and the export readiness that India would hope for and strive for to tap into its export potential?
The PLI scheme has been spectacularly successful for mobile phones, to a certain extent for electronics. Uh, there are 14 sectors, of which in two, I think it has been very decidedly a success. But it is not very clear as to the kind of impact it has had. Maybe it will take a little longer to assess what kind of impact it has had, but it has not been a roaring success in the other areas. So we need to perhaps take a fresh look at what are the constraints which are holding things back in the other sectors. Now, as far as why our manufacturing is stuck at 14% to 16%, etc., of the GDP,
Yeah.
I think the time is there for very serious reforms. Labor laws, the enforcement of contracts, land availability, clearances from the government, various levels. All these things are indeed inhibiting investments in manufacturing. So these are factors the government is very well aware of.
Right.
It needs to be, put together, and we need to sort out all these issues. Otherwise, manufacturing will be much more of a difficult proposition than investing in a services setup, for instance, where you have, let's say, 1,000 people working under one roof
Exactly.
and delivering services.
Yes, indeed. So, Garima, because the services sector is one piece that is holding up our export numbers, do you see that story changing? In fact, do you think we concentrate too much on our services sector and that its growth comes at the cost of a push in our merchandise trade, where growth largely has remained sluggish?
I would not say that the incentivization of services is at the cost of merchandise, but the fact remains that India lost the ship when it comes to low cost or low value add manufacturing. No matter how much hard we try now, we are not going to gain that competitiveness or scale when it comes to other smaller countries. Now, last decade, as China evacuated or vacated the space of low value add manufacturing, that was a time for India to get into it, which was more labor intensive manufacturing, whether it's apparels or shoes or toys, etc. Unfortunately, if you look at the data for India, as well as that of China over the last 15 years, you will be astonished to know that India gained competitiveness in the similar value-added high-tech exports, where China was also trying to gain competitiveness. So we have probably gained competitiveness in engineering exports, which are not labor-intensive, but probably have not been able to gain it, let's say, in textiles or other low value-add items such as toys, etc.
Yes.
Call it a failure of policy, or call it too late to be able to board a particular plane. It looks like it's going to be too late for us to even target there. Hence, the best strategy right now would be to target the manufacturing of those items and components where we are import dependent or import heavy.
Right.
And that's why electronics and the periphery, including semiconductor, etc., fare.
Right.
Also, second most important thing to understand is that the current trend or the global trend where we headed is dictating that you have less dependency for commodities or exports when national security is concerned.
Right.
So in that direction, the direction we headed in terms of policy for semicon or chips or PCBs are probably a right policy move.
Okay.
I think we should make peace with the fact that we shall be able to garner scale right now in these items only, absent tariff or absent reciprocal tariff from US of other countries. But in low value add manufacturing, we probably are too late to get into that space because the competitiveness is clearly missing.
There is. It's really quite obvious that competitiveness is missing over there. But Mr. Dasgupta, you've seen the inside of trade negotiations in your career. How do you read India's strategic push when it comes to negotiations? How do we fare when you compare what we do compared to other export-oriented economies? Now with Europe facing these pressures, China is recalibrating. I'm just wondering if India is doing what it needs to be able to talk tough and get good negotiations going.
I think we are putting a greater emphasis on negotiations and the negotiators' skills rather than on domestic reforms. You are only good at the negotiating table as your own economy. So once you start producing things competitively, whether it is a good or a service, you will be able to sell it and you will be able to get market access.
Absolutely.
Because you will also be able to offer something in return.
Right.
When you have your own act not quite up to the mark, then no matter how skillful a negotiator you are,
Right.
you will always be fighting a defensive battle.
Right.
So the first thing is that you need to have domestic reforms across a wide swath of areas,
Right.
starting with land, labor, the essential elements, and all kinds of clearances.
Right. So ease of doing business is something that we've been speaking about for a long time, how much we're able to achieve. But in the meantime, Mr. Dasgupta, very short answer. India's biggest export opportunity in the next 3 years. Is it going to be tech? Is it going to be textiles or toys?
It's not going to be textiles, definitely. There would be some marginal opportunity which we will be able to exploit. Toys is dependent on electronics.
Right.
So basically, if we keep importing components and if China keeps selling those components to us, we will make some progress in that. But electronics, if we try
Yes.
to encourage through the PLI scheme or other schemes,
Yes.
domestic manufacture and reduce the import content, I think that is one area which is going to be a sunrise area for India.
Right.
Because India has the technological
Sure.
advantage in terms of manpower.
Right. Garima, very quickly, can India replace China in global supply chains? Do you think that's a yes, a maybe, or do you think that's a distant pipe dream?
Oh, distant by dream. There is no country in the world that can replace China because the scale that they have achieved requires different kinds of policies that
Yes.
I don't think other countries can. And most importantly, they are far too penetrated in almost every supply chain of the world,
Yes.
including that of high-tech robots.
Yes.
So I think
Yes.
no.
Yes, indeed. So there you have it. India stands at the crossroads now of ambition and of action. The trade deficit is widening, but so is the scope of rethinking strategy. Tariffs are rising, but so must our resolve to ride out this storm and seize global opportunities. From scaling up the domestic production, negotiating smarter trade deals, this is just not about exports and imports anymore. It's about India's place in the global economic order. Garima Kapoor, Jayant Dasgupta, thank you very much for joining us with your sharp insights tonight. And of course, the big takeaway is India's trade playbook, which needs a smart rewrite. And the sooner, indeed, it's going to be the better.